Welcome everyone to 912 Financial Group's review of the 912 Playbook mid-April 2024 featured investor suggestion. Okay, let's review the mid-April suggestion. Advanced Micro Devices, we reviewed the chart, did our internal analysis, and decided the risk reward was there to suggest entering a bullish position with AMD at 146.64. We decided that a good place to put a stop was where it broke out off the October 2023 lows at 146.64 and set a target for it to return to where it was trading prior to the US government cracking down on chip sales to China. So our stop is 116.35 and our target is 198.83. So using that information, we produced our trade suggestion. Given where the stock is currently trading and our target and stop, we construct the position of buying an October 150 call, selling an October 200 call, and selling 2 October 120 puts. Or why October? Because we are investing and we target about 6 months for these investor suggestions. Now, you will notice that the suggestion makes note of a conservative trader. The conservative trader will utilize a stop while the aggressive trader will not. When you enter this trade, you need to decide if you are willing to take ownership at the short put strike, because that is the risk of the strategy. It may seem counterintuitive, but featured investor suggestions benefit those who are aggressive in their desire to take ownership of the underlying via exposure to the 2 short puts if the underlying takes another leg down. Because while the conservative trader locks in a loss at the stop due to the increase in short put premium and the decrease in net long call premium, those who hold the position to expiration will benefit from premium decay. They will also benefit from that window of forgiveness between the long call and the short puts, where the position can expire without harm to the trader. There will be daily P&L swings, but the only way the aggressive trader can lose is if the stock closes below the short put strike on expiration, where he now becomes an owner at the level the trader intended to own the stock. It's this large window of forgiveness where we can be wrong and not lose money that makes this strategy unique. As for maintenance for this position, for the conservative trader, it's remarkably simple. Place an OCO, one cancels the other, order to close the entire position should AMD trade either 116.35 or 198.83. Also have bids to close your short units at 5 cents good until canceled. For the aggressive trader, it's even simpler. Only place an order to close both call units should AMD trade 198.83 and let the short puts do what they will until you either get them back at 5 cents or they expire in the money and you own the stock. Or both would close the long call should it close in the money on expiration day. The conservative trader wants 0 residual position at the end of the life of the trade. The aggressive trader would only have a residual position should they get assigned on the 120 puts prior to closing them at 5 cents. The margin usage should be the margin used to sell 2 October 120 puts. If you would like to reduce the requirement, you can buy further out of the money October puts, the 110s or the 100s, but that would increase the cost of the trade by the cost of 2 of those units. So this is our starting point. Okay, let's see what happened. AMD opened and went a little lower on April 22nd, allowing you to be filled at your 10-cent credit bid. At the end of April, AMD closed at 158.38. Your position closed at a 9.97 debit, and with the 10-cent credit at entry, you are up $1,007. At the end of May, AMD closed at 166.90. Your position closed at a 16.51 debit, and with the 10-cent credit at entry, you are up $1,661. At the end of June, AMD closed at 162.21. Your position closed at a 14.83 debit, and with the 10-cent credit at entry, you are up $1,493. At the end of July, AMD closed at 144.48. Your position closed at a 420 debit, and with the 10-cent credit at entry, you are up $430. At the end of August, AMD closed at 148.56. Your position closed at a 642 debit, and with the 10-cent credit at entry, you are up $652. At the end of September, AMD closed at 164.08. Your position closed at a 1575 debit, and with the 10-cent credit at entry, you are up $1,585. During the month of October, several things occurred for both the conservative and aggressive trader. First, they were able to close the two short October 120 puts on October 4th for 5 cents or 10 cents in total, and removed your downside risk. Now your credit has been reduced to a no-cost trade, and it allowed the conservative trader to cancel their downside stop. Next, after a bit more time decay, you were able to close the October 200 call on October 11th for 5 cents. Now your no-cost trade has been increased to a 5-cent debit, but now you have unlimited upside potential instead of capping it at the short call strike. AMD closed at 155.97 at October expiration. Your position closed at a 597 debit, and with the 10-cent credit at entry, minus the 15 cents you spend closing units, leaving you with a net profit of $592. And here's the lesson to be learned from this trade suggestion. Investing involves looking for good opportunities within the big picture, and good opportunities rarely look good at the time they are presented. We like to invest when things look bad, identifying good companies at a discounted price and expecting future improvement in price not in a day, a week, or even a month. We are investing, not swing trading. In fact, when we, 912 Financial Group, make a featured investor trade suggestion, we operate under the premise that we are 100% okay with, in fact. We desire ownership of the stock or index we are suggesting at the discounted levels the positions would produce should the short puts turn to ownership at their strike price. We're in it for the long haul. Sometimes the desire to not lose money costs you more in the end. Fortunately, that wasn't the case this time, as AMD never triggered our stop for the conservative trader. And in the end, both the conservative trader and the aggressive trader walked away with the same $592 profit and zero residual position. As our maintenance for this strategy is to close our call position at the close of expiration day if they are in the money. Not a bad profit, given the risk of the trade was owning AMD at 120. That said, if you are viewing this review and are still not sure about subscribing, request a free 14-day trial edition at 912financialgroup.com. Contact us with comments or criticism at 912financialgroup.com. Check us out at 912 FinGroup on X. Have a great day.